Today's video is all about Jupiter, a DEX aggregator on Solana. Today we're going to be doing a deep dive into this project, looking into some of the fundamentals such as the team, the tokenomics, the utility, and the overall value proposition, trying to figure out whether Jupiter has what it takes to make it to our portfolio. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunity. And the question is Jupiter an opportunity? Guys, today we're going to be doing a deep dive. As I mentioned, we're going to be looking into some of the fundamentals like the team, the tokenomics, utility, overall value proposition. Honestly, trying to figure out if this project should be part of our portfolio. We're going to be looking at the good, the bad, and the ugly in today's video, trying to figure out a lot of these details, and ultimately from a retail perspective, we want to know, does the Jupiter project offer everything necessary for the retail investor to get bullish? We want to get bullish here, but we need to have that information, and we need to be able to, filter through the information fairly easily. All right, guys, let's begin. Let's see what's going on here. Let's begin by the main website. So I got this link on a CoinGecko. Apparently this is the main landing page. It doesn't look like a very typical landing page. It looks very underdeveloped at the current moment, like it's just straight right into the swapping and the DEX part of things, right? Which is, of course, is part of the value proposition. It's what it is. Jupiter is a DEX aggregator. What it does is it looks for the best trades out there, the best swaps out there on Solana. Basically, looking in many different DEXs to find the best trade out there for you. So that's what aggregators really do. They scrape through all the DEXs and find the best prices and this and that, and then finally give you the best options available, which is good, definitely. Now, if you remember previous cycles, we had Ethereum had a few DEX aggregators. There's still some DEX aggregators out there. 1inch is one of them for the Ethereum network, and 1inch did very well in the bull run. It did pretty good. But ultimately, the DEX aggregator is not a new idea. However, it is new to Solana in the sense that Solana is an up-and-coming exchange network, blockchain, and ultimately the blockchain itself is picking up a lot of hype, given the fact that it's been doing very well, and of course the fundamentals on Solana itself is very hot, to the point that people believe that Solana could flip Ethereum, which is possible. Why not, right? So now, if you got the hype and you got the interest and you got the overall market participation getting involved in the Solana network, why wouldn't Jupiter do very well? And guess what, guys? Jupiter has been doing very well. Jupiter is one of the major gainers in the last little while. And of course, the question is, could it sustain it? Is it just being pumped up alongside the pumpamentals of Solana? Well, you know what? It doesn't matter. Ultimately, it's going up. So this is a good thing for Jupiter and every Solana-based project that is built on the Solana ecosystem. So it's looking good for Jupiter, being a part of the right narrative at the right time, and obviously looking pretty good. It looks very typical. You have the ability to choose different, coins and different projects and meme coins and everything. And of course, it's going to scrape through all the major DEXs, Radium, Orca, and many others. Guys, there's a lot of them. I have a list for you coming up soon, so stay tuned. We'll definitely look at some of that. But you can see you can swap, and it's going to scrape through all the DEXs and give you the best swapping options for you. Okay, you connect your wallet. It's a DEX, a decentralized exchange but aggregator. Okay, so pretty good. One thing that I'm going to have to come out real quick is you go to the Jupiter station. This is where the documentation is, and unfortunately there's no real clear white paper. I went on the Discord to ask if there was a white paper, and it was almost like brushed off, like, nah, there's no white paper, and almost like laughed it off type of thing. And for me, that kind of bothers me, because typically speaking, when I do these deep dives, guys, I've been doing deep dives every week for the last 70 plus weeks, and I have never seen a project not have a white paper, at least explaining some of the attributes that the project has to offer. A one-stop shop type of place where you can get tons of information, especially regarding trying to get people interested, right? Retail investors need to get interested in where they get their info. So I come here and you do this Jupiter search, and we're going to talk about the Jupiter search in a second. I hope I do have that link open. So what I'm going to do is I'm going to make sure I open it right now. Then you have governance, alluding to the fact that it is a DAO. It is governed by the DAO. And guess what? It is, okay? It does have a DAO, which is a good thing. And we'll talk about the DAO in a second, because it's the main value proposition behind the JUP token is because of the DAO and governance, okay? So we'll talk about that. And of course, there's other products, other things to talk about here, other things to read, perpetuals, which they integrated already. They've partnered up with another project to provide information and provide some value there regarding perpetuals, which is important. We'll talk about that as well. And that's it. Pretty much we're doing good. Jupiter lock and so on. So there's some good stuff here, but no white paper. Right, so this is something that we really, as a researcher or somebody that does deep dives frequently, I look for white papers. Now, docs, you can see self-hosted. There's a lot of information, but literally, we need a white paper that can summarizes everything that almost like a pamphlet, let's say, or a quick slide deck that needs to be there in order to get us bullish. Okay, so I think that needs, and you can see even the main landing page of the website doesn't even do the greatest job to kind of sell it, right? So, okay, I understand maybe it's new, maybe they didn't get around to it, but it needs to happen. This is the main event. If the market goes bullish again, it's the main event. We need to get something happening here. You need a proper landing page. So from a marketing perspective and website perspective and documentation perspective, there has to be a lot of work here. Now I'm seeing a bit of a trend. A trend is that every time I do deep dives on Solana based projects, the team is not ready with the packaging. They don't have proper documentation. And I'm wondering why that is. Is this a consistent trend amongst Solana-based projects? Now, Solana has a reputation, or had a reputation, of being very focused on meme coins that don't really require all that documentation. But when we're talking about good projects like Jupiter that have good fundamentals, it's got to be clearly described. Those fundamentals need to be clearly described in a white paper. So I'm going to move on from this topic. I don't want to harp on it, but ultimately this is where I'm at as of now. Okay, so back to here again, we have the governance. Let's move on. This is the Jupiter search. So if you click here, you're going to be given access to this Jupiter search, which is like an area where you can do some research. Now I'm going to tell you, this is not an easy way to do research, because there's a lot of everything just in a forum-based platform, and you don't know what's real, what's not real. And of course, you got to really scrape through things. And you can see Jupiterary. This is something that is happening in January. There's going to be an airdrop. People are on the fence about this airdrop, given the fact that it wasn't voted on in the DAO. It was basically just proposed somehow, and there's a little bit of ambiguity there as well. What's going on with the future distribution of the token? Is it purely airdrops or not, or what's going on there? There's not a lot of information with regards to these airdrops, right? So this kind of bothers me, because really even the founder himself did make some statements earlier on, or online, basically suggesting that tokenomics or token utility is not that important. Where coming from my neck of the woods, as far as being an investor or being someone that's comparing projects to projects all day long and looking into the fundamentals all the time, I highly disagree. Because if you're going to have a competitor that's going to offer utility versus what you have, it's very important that you understand that they're going to have an edge, right? And that edge is basically risk to reward. It's very risky in a scenario having a token that has very little utility, and relying on the utility to improve in the future is great, but it's called speculation, and speculation is risky, right? So we got to understand what that really plays out to become. It ends up being position size, right? How much of a position size am I going to get into if the fundamentals behind the actual token, forget the project for a second, because what we really have to do is define the difference between the project and the tokenomics, or the token itself. The project, meaning Jupiter, is solid, but JUP itself, there's no information with regards to its tokenomics and its vesting schedule and its distribution and all the things that we look for in deep dives it doesn't exist. And when we start searching here in this research forum, things get a little bit out of hand. Like, I don't know what's valid, what's not, what's a proposal, what's a complaint, what's a this, what's a that. And you shouldn't expect a retail investor that doesn't know much about, these deep, topics that, airdrops and Jupiter and tokenomics and, dilution because of the airdrops and all these things that people talk about. You shouldn't expect a retail investor to absolutely know all of that. Now, a white paper could go ahead and kind of inform them a little bit and provide that information and obviously give them that, sense of bullishness. But this for me is not a great place to provide accurate information. There has to be something more formal. Okay, so it's a good place to have. It's a good thing to have. A forum is great, but explaining postmodern for new users, moderation. So what's going to happen with moderation? Who knows if that's even important. JUP airdrop proposal for season 2. There's another potential airdrop going forward in 2025. Is it going to be purely proposal? Now, I did make some clarity here that some airdrops don't even need to be proposed and voted on by the DAO, and they could be just purely done by the team itself, and because the team basically are going to be in control of a lot of the tokens, and we're going to talk about the tokenomics in a second. So I'm going to move on from here because there's a lot to talk about. Jumping right into Genesis and tokenomics. Again, back to the research thing. I was able to get a link from one of the team members on the Discord. Thank you for that help, because there are great people in there. Some of them not so great, mostly the general public. But the moderators there were very helpful, very willing to provide some information for me instead of digging. And you can see there's just one random post here that could spell out a lot of information. And this one random post is made by the founder himself, Meow. Okay, we'll talk about Meow in a second, but for now, let's go see what he's got to say, and we're gonna go straight to the important stuff, because of course this is all important, but it's quite self-explanatory. I don't think you need me to hold your hand throughout the entire step of the way. Next major steps for Jupiter. This is what's important here, because the 50-50 tokenomics, this is where it's like literally by visual you can see this is how they explain their tokenomics. 50% team, 50% for the community, and you can see it's right here in this distribution. Now I'm just going to keep in mind there has been an update with regards to some of the details behind tokenomics. I'm going to show it to you in a second, but right now we can see that 50% is going to be managed by the team and 50% is going to be distributed to the community. Now 20% to current members, 20% to strategic reserve, and then 10% for liquidity provisions, which is most likely for providing liquidity to exchanges. Okay, so still it's within the governance of the team, right? So this means that they're in full control of 50% of the liquidity that passes through this project. That is significant. Okay, and then the other 50% is going to be distributed to the community, 4 rounds of airdrops, and then contributors and grants. So 4 rounds of airdrops that, again, are going to be DAO induced, and essentially they're going to be voted on and so on, but there's no clarity there. Reality is when it's going to happen. Now, some might say, the democratic process is the best process, and I understand, and I would agree that would be obviously the case. If the community believes that it's time to release more tokens, so be it. Let's reduce basically take on the fact that we might get a bit of sell pressure and a bit of risk of dilution, but guess what? It's okay. The community agreed. So it could be the greatest scenario, but 50% going to the team and 50% going to the community kind of bothers me. And, a vesting schedule for the team would be awesome, but there's no such thing. I couldn't find anything, and there's nothing here. Guys, let me know in the comment section below if there is any information that I'm missing. I tried my best to scrape through and ask the pressing questions on the Discord, and really all I got was this, and here it is. Okay, so 50%, 50-50 partnership here. So your liquidity is being controlled 50% of it by the team. Now, some of them are held in multi-sig wallets, some of it is held in cold storage, hot storage, and the team commitment, and you get what I mean. There's a lot of information here about how the tokens are going to be distributed, but the reality is that 50-50. That's the most important thing, and ongoing the voting is going to happen for the four airdrops, and most of the distribution, like it was described to me on the Discord by the team members, was basically that the airdrops are going to be the way of distribution. Okay, guys, not a very typical way, to be honest, to rely purely on airdrops, but as long as it's community voted on, it's fine. But it was brought to my attention that it doesn't necessarily have to. Okay, so this is the ambiguity here, guys. And again, we shouldn't have to go and read version after version and update after update to really know what's going on here with regards to tokenomics. And this is slightly outdated. Let's get into the updated proposal. It is, let me see if I can quickly scroll to the most important part right here, right in front of my face. For the first vote, we propose 30% reduction in token supply. So again, this is how you can see the DAO actually working. They wanted to reduce it from 10 billion to 7 billion, and that's basically what happened. The amount that is managed by the team gets reduced after the cut. It comes out to a certain amount here, 3 billion tokens, and then you keep on going down after the cut. You have 2.4 and so on. So really, in summary, the amount it was reduced. The amount of circulating supply, which is good. Max supply is now 7 billion. Ultimately, it's a reduction in tokens, meaning the supply gets reduced and should put a bit of pressure on price to the upside, given now that there's less tokens. Good stuff. Okay. Not bad. I like this. At least we're getting a community involvement, and of course, we really need to understand that if we have a DAO, we're decentralized the authority of the organization, which makes it less of a security. Okay, this is one thing that we really have to understand. A lot of projects introduce DAOs so that they are not securities, but we can see that 50% of it is behind the team, and it can be a little bit troubling. Okay, so this is something we got to understand. And unfortunately, guys, I don't have any much more documentation. This is all I was able to get. Now, it is a DEX aggregator. That's quite self-explanatory. We don't need much there. The token utility is very, very basic. And then there's nothing really explaining it other than what I was able to find out through speaking to the community and so on, and reading some documentation that was provided again about the founder and some of the statements he made. And the only use case, the only thing right now at the current moment that you could use JUP for, JUP, the ticker, is for governance, to vote. That's it. There's no rewarding system. There's no nothing. So for me, that's a little bit lacking. It's a little bit, there's not enough there. Given where we are in this market, it would be nice to see, especially when you're talking about DeFi here, to see something else around the token itself. Why do we need to hold the token? What's the purpose? To vote? What about if you don't want to vote? What about if all you want to do is hold a token for something else? If there is no anything else, then there's no real reason to hold it other than for potential gains upwards. And why do we think potential gains? We think potential gains because it's part of the Solana ecosystem, not necessarily that JUP itself is going to give you any rewards or anything. We just know that Solana is going to do well, so anything that's around Solana it should do well regardless of the token. That's a little bit of a scenario there that I'm not comfortable with, right? So I want to see JUP itself be able to hold up on its own with some good utility for that token, not utility for the project. Let me clarify myself right here, because again, I know I'm going to get statements, but Jupiter itself is a necessity. It is amazing. For what it needs, for what it is providing as far as a software solution, it is great. It's an aggregator. It does great at what it does it well. Hot topic, Solana. However, what does JUP do other than voting? Okay, just keep that in mind. Okay, let's move on. I was looking into some of the marketing. I was looking into the marketing because after that, there was not much documentation, technical documentation. So I went on to see what's going on in the marketing. The marketing is healthy. I did some research on the actual engagement on the posts, and the engagement is very organic and the growth is very organic looking. So that was pretty good. And they're consistent, slow and steady. There's not like quick spikes in volume and retweets or followers or anything like that. It's very nice and organic, which I appreciate. Okay, it doesn't look like it's inflated by bots or anything like that. Another thing that I was able to deduce is the founder himself, although he is semi-doxed. I'm going to be clear about this. He only he himself, no team member, other team members, is open to the public. He is, but only to a degree. He goes by Meow, and that's about it. We don't really know much about him to a degree. Only what is given to us through his own words, but ultimately being semi-doxed in a scenario where the team gets 50% of the bags, it is a little bit scary, right? Because we don't know where this team is coming from. We don't know their history. We don't know the talent behind the team. We don't know anything. And that becomes a little bit of an issue. Now, it could be that Jupiter, because it's the first mover, is taking advantage of the fact that it doesn't need to. Maybe if there was more competition there, that it would be more willing to be a little bit more open about everything else, and maybe I'll be a little bit more clear about tokenomics. I'm just saying here that for what it is and how it's packaged, it's the packaging that bothers me the most, not the tech and what it's trying to, its value proposition. Its value proposition is awesome. It's the tech, the tech itself is not clear. I don't know what's going on there, right? So, and it would be nice to know who's behind it. So semi-docs, a lot of AMAs, a lot of interviews, smart guy, apparently very well-rounded. I was able to get a bit of information here on IQ Wiki. You can read about his statements with regarding to the airdrops and token utility. He believes that token utility is not that important, apparently. There's a little bit, again, I'm not too, I do deep dives all the time. I compare projects all day long. I would highly disagree when it comes to a competitive nature between one DEX aggregator and the next. If one offers a better utility, people are going to move on. I think he's speaking in relation to the fact that there's no other competition at the current moment for Jupiter as an aggregator. That could be the case. Again, I'm not going to put words in his mouth, or I'm not going to be saying much here other than, Jupiter's killing it. It's doing great, but I think it's off the back of the Solana hype, not necessarily behind that this project is nicely packaged or anything like that. What else do we got? What else do I got for you guys here? So we got the proposals, we got all this. You can see that it was a very simple deep dive. I couldn't really offer you much other than this. And you can see that, there's no LinkedIn accounts. There's no, who's the dev behind it. I don't know much about it. Okay, guys. So as per usual, I do give you guys an infographic. So let me kind of summarize this as best as I can. Let's get rid of this. Let's make this a little bit bigger so you guys can follow along with me. I usually have this prepared, but what are you going to do? Sometimes you just wing it. And let's make this a little bit bigger so you can see. Now, ultimately, Jupiter, it's a great project. Like, I'm not going to knock on it. It's good. It does what Jupiter does. Everything that a person that is bullish in the Solana ecosystem, it does everything that we would want, 100%. But then remember, I am judging it based on Web3. Right? It doesn't need a token other than governance. At this current moment, this token, JUP itself, is not necessary. It's not needed, and it's only needed for governance. And it's only needed for the governance, if with regards to capital, to basically govern 50% of the liquidity. The other 50 is not open for governance. It's part of the team. This is what kind of bothers me. And I know I'm maybe simplifying this a little bit, but simplifying is what the retail investor needs. Clarity and simplification. Now, there is no clarity because there's no documentation. And as far as simplification, we try to make things a little bit easier to understand, especially in this, emerging market where there's new ideas all the time. And I think Jupiter has the responsibility to really plead its case to the general market if it wants mass adoption. But like I mentioned, it looks like it's literally, jumping on the Solana. It's doing well because of the Solana thesis. That's basically it, and I stand by that. Now, the ecosystem is great. Like, it's great. It basically, it's a DEX aggregator. And it aggregates from Orca, Radium. Again, Radium is a massive DEX. It's a DEX. It's not an aggregator. It's the main DEX for Solana, so that's great. And Ethereum and Aldrin and Mango and Crema and Atrix. So these are DEXs out there. So what it does is it scrapes through all of them and checks which swap is the best for you. All right, and ultimately it brings it to your attention, and then you can execute a trade or whatever you got to do, a buy or sell, whatever. So great stuff there. 10 out of 10. That's what we could want. And again, this is very similar to other aggregators that exist on Ethereum and so on. Utility, it's only for governance. And I know I downplayed it. I still gave it a 4 because governance is so important, or else it's going to be a security. Now, I'm not sure if governance is enough, because of the capital that's involved is 50-50, and then how much of the decision making actually goes through the DAO. Is everything going to be judged by the DAO? And I don't know, and there's no clarity there again. So I'm a bit on the fence here, and based on some of the interviews, he's very convicted in his vision for Jupiter, and ultimately that shows me that he wants to retain a bit of that control. So ultimately the governance is split 50-50 because the capital split 50-50, and at the end of the day it's the capital that talks ultimately. But he did mention that future additional attributes may come around, which is hopeful. And again, speculation is where we get into the markets, right? We hope that we're going to see things get a little bit better, and ultimately we buy now before it does, right? And then because after the fact, we're going to see the price go up, hypothetically speaking. Now, roadmap, there is none. And it was funny because one of the team members on the Discord said, well, basically there's no roadmap. They don't want to have any obligations, or make any promises, because then after the conversations are going to be a little bit hectic, let's say, in other words. So I get what that means. Ultimately, I know the development is not easy, and hitting milestones on time, very rarely happen. But you can easily have a vague roadmap, even if it's a quarterly roadmap, to give an idea to investors where the efforts are going to be placed. Now, they heavily rely on the DAO, the governance page there, to put all those requests and all those proposals and all of that into there. It's not a very clean way to package your product. So ultimately, yes, although I understand that, not having a roadmap gives you the flexibility, but it also introduces risk, because we don't know where the capital is going. We don't know where the efforts are going. We don't know where the focus is. We don't know anything. And if it could be nowhere, and it could be everywhere at the same time. And a roadmap would kind of say, okay, this is where they're going in the next 6 months, or the next, 3 months. This is where they're going to be focusing. Roadmap is necessary here, guys. I'm sorry to say that, but we need to package this all up in a nice white paper that has all of this. The team founder Meow is semi-doxed. Meow is an individual. He goes on AMAs and interviews, and is on YouTube videos and all over the place, on X, as I shown you before. This is him right here, interviewing. But ultimately, our biggest concern here is that the team itself doesn't only consist of a founder, right? The founder could be the greatest talent in the world, and in this case it's semi-doc, so we don't even know his history accurately per se, but at least he's out there showing face, which is fine. But he claims to have solid tech history, which should be great, but the rest of the team is not there, and I'm 50-50 because he's semi-doc. So guess what? 50-50 for the rating. I need to know more. I need to know, especially that the team holds 50% of the tokens. Guys, I need to know who you are if you're going to be holding that much liquidity. And you got to understand, it's all about risk management. It's all about risk management. Let's move on. Socials, 9 out of 10 here. Great effort, good stuff. They're up 34% in the last 30 days. They're also up with regards to them posting on X, of 4%, and their followers, they got a fat amount of people following them, which is great. I like the socials. The Discord was awesome. The experience I had on the Discord was great. 9 out of 10 there. I just feel like maybe some flair, because they're slowing down a little bit with only 4 posts, up 4% on the post, but it's still 296. So there's a lot happening there. I'm wondering if a bit of a campaign or something like that can bring some interest. But look, it's very close to a 10 out of 10. If I can give it half marks, I would. But tokenomics, this is where things get a little bit, again, 50-50. Right, gets 50-50 here because there's these airdrops. So there's an airdrop in January. They're calling the airdrops of Juperaries. Okay, so there's one coming up, and this one apparently wasn't voted on. This one was one that was just created out of, by the team, by Meow, I guess. And then going forward, they're hoping that the next ones that they can be voted on, and that's the future going on for the next airdrops of when and how much, I guess. And according to some of the documentation there, it says 4 airdrops, but again, everything can be changed based on voting and this and that. And when you have the team holding 50% of the tokens and the community holding the other 50, the community only getting their tokens via airdrop, it kind of it leaves things very 50-50 for me. Its tokenomics are not clear, and they're not the way I would be interested in doing it. Now, again, because they are the only DEX aggregator out there on the Solana network, it's like you don't have any much options, and you can see how much strength it's been showing as far as Jupiter shows. It's been showing tons of strength, and people are associating the Jupiter strength to the Jupiter token, not realizing that JUP itself is not that strong as a token. Like, you have to understand what I'm trying to say here. So relationships, great relationships. Again, Jupiter itself has some great relationships. Gauntlet, if I'm pronouncing that right, perpetual development for the perpetual side of things, Chaos Labs for risk management. These are good relationships, nothing major, but good relationships. I would say that if there was something really, really cool, really interesting, then maybe I would give this a better ranking, but they're still young and a lot to come in the future, and they're listed almost everywhere except one, and that's Coinbase, and it could happen any moment, right? And again, this for me is not necessarily opportunity, because with risk you get opportunity. With a risky scenario here in this category would be a scenario where we only have a few listings, maybe KuCoin, Mexi, and that's about it. But because you're already on Binance, you're not really taking too much risk here, and obviously the reward won't be there because you're listed on almost every single exchange. And we know that when you get an exchange listing, you definitely start to see some volatility in price. Usually the volume takes it to the upside. So in this case, you're not taking too much risk. You're getting into a really good scenario. I wouldn't, the only way we can see some more volume is if it gets listed on Coinbase. After that, guys, this is not really an opportunity. It's literally something, a sign of strength. The fact that we have liquidity on many exchanges, particularly Binance, having, I'm sure they have enough liquidity to offer, make things very accessible. But ultimately, this is good. But again, not really an opportunity, because if we could expect a Binance listing or something, or a Coinbase listing in the future, that could be awesome, right? So then it would obviously be a 10 out of 10 right there. So good stuff. Ultimately, we have liquidity. We got, being able to generate tons of trading volume. In the last little while, we've been doing pretty good with regards to trading volume, almost 6%, $73 million dollars in trading volume, which is good. I look to, as closer to 10% would be better, but again, 6.3 given their current market conditions is not bad at all. Again, the supply, and if we talk, kind of put it back to the tokenomics a little bit, I just want to be clear that right now only 13.5% of the circulating supply of the max supply is in circulation. So again, I'm going to repeat that: 13.5% of the max supply is in circulation. Okay, so the max supply right now has not been updated. So this is another thing. They want to reduce it. Remember what I mentioned, the reduction has to happen. It's not on CoinGecko. I don't know when it's going to happen. It was a proposal. I don't know if it's going to happen or when, or if it already did. This is how things kind of like get lost in translation. And again, clarity. They need a white paper that gets up to date and with clear roadmaps and things like that. So I'm going to leave it as CoinGecko has, and how the retail investor is going to get proposed, and how the retail investor is going to go and do that research. And guess what number they're going to see? They're going to see that number. Okay. And again, if that's not the number, it's the responsibility of Jupiter to provide that information to the retail investor. So right now, 13.5% in circulation, and it's a max supply still of about 10 billion tokens. So we need to get that very clear. Now, just let me give you my verdict. My verdict is this. Okay, my verdict is a bit. It could be, you would expect a lower rating. In fact, I would probably give it a slightly higher rating. And the only reason why is because Solana. Okay, and the fact is that Jupiter itself is solid. Jupiter as a software is great, but the token itself is a problem for me, because I don't know why I'm buying it. I'm going on and I'm buying it because I like Solana. And that is great. Obviously, you can buy Solana-based projects for the mere fact that the ecosystem is going to do well, and because of that, we'll see capital flow in. That's totally fine. But on its own 2 feet, as a DEX aggregator, it's good. But as a token, JUP, the ticker, I have problems with it. Emission is based on airdrops that can be initiated by the team or through community voting. This is something that, again, more clarity here. Is it not? Is it? white paper, guys. So that's a little bit of an issue. Dilution can be triggered at any moment by community or team, I guess, in this case. Discord is active and the mods are willing to answer any questions. But then again, even mods sometimes, in my experience, because again, I've been doing deep dives for almost 2 years now, publicly here, posting them on YouTube and on many socials. Sometimes even the mods don't even know. Okay, and sometimes the mods give you false information, and if I can't find it on anywhere else, how is a retail investor, a person that only knows Bitcoin and Ethereum, gonna take a leap into a new ecosystem without proper information? This is my biggest problem, and honestly, it's like I'm advocating for the retail investor, because really what we want is retail capital inflow very soon. We need that in order for the altcoin market to do well. So what we have to do is hold these projects accountable. Overall packaging of the product could be improved severe improvements here, guys. Even the landing page doesn't look polished. There's nothing there. Maybe okay, have a second link that takes you straight to the DEX part of things, but you should have a landing page with something that explains what it is and what it does, and a link directly to some documentation, maybe a video or something, you know, from marketing perspective. It needs to be there, right? Gathering information about the project is not retail friendly. It's not at all. It's not friendly for anybody. It was very difficult, to the point that I felt like, how am I going to do a deep dive on this? I know it's bullish. I know it's great. I know it's probably one of the peak performers in the last little while. And I know it's almost necessary for every Solana bull to have a bit of Jupiter in their portfolio. But what about JUP itself? How am I going to, you know, say that JUP is a necessity in a portfolio on its own behalf, not, you know, piggybacking off of Solana's hype? This is my biggest issue. Now, again, if we reach the market cap of about $5 billion, it could easily do a 5x. And I looked at other projects from previous cycles, like 1inch, and try to compare it. It can't even compare, because at the end of the day, right now, Jupiter's exceeding 1inch's market cap in the previous cycle top. Okay, so that's bullish from a Jupiter perspective. That's crazy bullish. Jupiter right now is very, very valued very high. I'm not saying it's overvalued. I'm just saying its value is quite high. It's expensive. It's very up there. Now, from a gains perspective, you can see that once we do a 5x-ish type of scenario, we're at $5 billion. Could we go higher? Sure. But we're saying, like, you know what, maybe could we're taking risk once we start going for those moonshots. Could Jupiter be an actual moonshot? That's the question. Now, could it, you know, piggyback off Solana enough to make that moonshot? My opinion, it's very risky to believe in that. You know, Jupiter needs to have its own fundamentals that people want to get to hold it, not hold it because of Solana, if you get what I mean. So target $4. That's great. I give it a ranking 7 out of 10. I could give it more. I could even give it less. The reality is it's in that vague area for me, because we want to hold it. But then again, would I hold it? Would I hold 1inch on Ethereum? No, I would not. I would not hold 1inch for Ethereum, the 1inch token, but I would hold it a project on Solana that's an aggregator that doesn't even tell me anything, right? So this is the scenario here with Jupiter. It's a great project, but there is issues. There is issues. Guys, I know you're here to talk about charts as well, so let's take a look at some of this price action. What is Jupiter doing right now? Jupiter, at the end of the day, is going sideways, and the market itself in the last 48 hours, you know, or so, has been looking a little bit bearish. And the question is, should we be buying the dip and anticipating that these projects run to the upside very soon? Let's take a look at this in a little bit more detail. Generally speaking, Solana-based projects in the last little while don't really look like this, right? They've been doing a lot. They've been doing really, really well. But if you look at old price action, Jupiter came up really hard, and now Jupiter's kind of going sideways. Okay, so really, it's not bad of a place to start considering Jupiter to be a good buy opportunity, but its market cap is massive. So what do we do here? The reality is you're taking risk because of that. So could it be overvalued? And this is the thing. That's up to your judgment call. Is it overvalued? Personally, it seems to be slightly overvalued here. Okay, given, you know, what I just looked at, and, you know, I spent time trying to figure out what it was all about. But the range suggests that people are not buying or selling in any extreme way, forming a trend. It's a battlefield right now within this structure. It's a nice sideways structure. We're not breaking out of it with any strength or breaking below it with any strength. We're creating a ton of volume right here, right around the 200 daily EMA. Now, we did get a bit of volume right into this spike to the upside, but we got a quick rejection, and it could be that it comes back down to the bottom of the range. Now, I'm just going to pepper this in. The reality is I think the market is quite hesitant given the fact that the elections are around the corner, and that could be keeping people a little bit hesitant and de-risking as well, because they don't know what the outcome of the election is going to come. So people probably getting risk off and maybe selling off and willing maybe to get back in once we get some results with regards to that, but not to date this video, because reality is that is going to happen in a few days. But what we want to see ultimately is to see Jupiter's price action break the structure. Right now, it's within structure. You could trade this range, sell tops, buy bottoms all day long, and that would be fine. You would have got into a couple good trades and you would have been fine. But ultimately, what we're really looking for is a break of this high. Now, you can see it's clearly in a downtrend, but where do we buy support? Support, there's a little bit of support right here. I could see a node of volume beginning here that could show that we could come down here and maybe get some support and then maybe go back up. But the reality is the majority of the liquidity to be hunted is down here, down at these lows. So we could expect maybe a hesitation, maybe even come down to hunt this liquidity. And we do have a volume gap below that presents opportunity. Every time I see volume gaps like that, I get excited because it could show us that is a weak spot and even an area where we can get a bullish reaction to the point that we can even get a pivot point, to the point that we get that bounce and start moving back, way back up, even breaking out, right? So these are things that I keep an eye on because I want to make sure that I'm well prepared, because if we do get here, we have the top of the volume gap, even the bottom of the volume gap that we can play with, buying in at about 63 cents. I know that would be quite horrible because ultimately that would make a dip of another 20 to 30% to the downside before we can, start crossing our fingers and hoping that we get a nice recovery, right? So this is where we're at. You're buying mid-range at this current moment on a downtrend, on a bearish dip, but that's the daily. That's the daily. You can see it clearly, red candle to the downside. Now, if we quickly look at oscillators, you can see volatility is definitely oversold. Momentum is back to previous or historical levels where a bounce and support has been provided. Okay, let me just quickly start from here and see if we can, kind of make this clear. You can see that we've been slowly trending upwards. And in fact, even the highs of the momentum have been kind of getting slightly higher as well. Even if we include this, maybe it would make a little bit more sense too. But you get what I mean. Like we've been slowly trending upwards, slightly peaking above the overbought condition at about 70% right into here. So what happens at this level is we're patiently waiting for follow through of this type of divergence. It's a class B bullish divergence. It's a double bottom, type of scenario with momentum shifting to the upside. So class B is not bad. The thing is that once we break these range highs, I think that FOMO will start kicking in, and especially the FOMO that Solana could be flipping Ethereum, which is very possible. Right, so this is something that we have to keep in mind. Overbought condition, do we get here? If we get overbought above the 70, that's where we get the breakout. In the meantime, we're waiting for volatility to get some support down here at about 12%, again down at these levels, which we're already here. We want that reversal and a pop to the upside. When we see the volatility, the orange line move up back here, and we see that happen, it's likely that we see the momentum go up one more time. And once we see that happen, guys, remember each peak of this momentum, each peak brought us to good levels, and then maybe good levels again, and then we start testing these tops. If we short squeeze to the upside, guys, that's how we get the massive impulsive expansion that we're looking for to see Jupiter, Solana based ecosystem, and maybe the entire altcoin market do very, very well. In the meantime, we have the trend oscillator looking pretty bad here. EMA is facing down, but if we look at what's happening in the last little bit, we see that the momentum is definitely trending to the upside. We have expansions getting smaller, starting from about here. We got bullish divergence, smaller, but the EMAs are slowly trending to the upside. trying to get the trend oscillator in the bullish control zone, which is the top half of the oscillator up here. It's getting out of the bearish control zone, which is the bottom. You can see we got lots of bearish expansions down here, and slowly we are trending and trending and trending to the point the expansion should eventually be nice and big. Every time you see the EMAs up in the bullish control zone, that is usually where we get the massive expansions. We're working on it. We're working on it. And it's not just Jupiter that's working on it. The market, the altcoins are struggling, and they're working on this shift to the upside. At any moment, guys, I know when you least expect it, when the market is at its worst, when the fear is at its peak, that's usually when we get the quick reversals and pain gets induced because a lot of people get left behind. Now, the question is, should we be buying Jupiter on this dip? Again, DCAing is the best strategy because as we get closer to this bottom, invalidation becomes a lot more clear. What I mean by that is that risk to reward ratio is important to keep in mind. Now, if we get in right now, let's hypothetically say we know resistance has been very, strong right around this zone. Okay, and your risk is that we break below here, you want to get out. More or less, you want to get out. You don't want to hold. But look at the risk to reward. It's really bad. 1-to-1. That's a coin toss. That's a coin toss. Now, you might say, you know what? It doesn't matter, Mike. I'm going to hold long term. The reality is, my vision is bull run. I'm up here. Okay, fine. That's totally fine. And if it happens, just understand that your stop loss needs to be kept here, and that you're going to be taking a 29% hit to get stopped out down here. If you're okay with that, that's totally fine. But what about this? What about if you could DCA a little bit? Buy in a little bit now, 30%. Buy in a little bit more at lower levels. As we get closer to invalidation, again, invalidation, let me put a thicker yellow line. A great invalidation would be right around here. Invalidation means you have a thesis, a bullish thesis, right? It does look like it's rounding upwards, right? It's quite clear in how I see it. If it doesn't round anymore and this becomes a bear flag where we start coming down, you got to get out. And that level to start considering defensive strategy is 62 cents. Anything above the 62 cent mark for me is DCA opportunity. It's opportunities to buy the dip and hope that eventually we continue making not only a higher high as we did here, but a higher low like we did here as well, maintaining this trend to the upside, because we made a high, we made a higher high, we made a low, a higher low, and now we might be working on another higher low, going for another higher high. And eventually the market starts to realize that there's a trend building here. And guess what the market does? They increase their position size, because that means that they're getting confirmations that we're getting a trend reversal to the upside. And when you increase your position size, the market volume starts to increase significantly. And that's what we look for as an indication of market participation, which is volume. So this little trend reversal that we're getting at the current moment could be the beginning of Jupiter and many other projects, as I mentioned, to actually break out of structures that are holding it back from getting into expansions. Expansions meaning nice moves to the upside. Before I get into the expansion thing, if we can DCA down here and improve our ratio, guys, that would be awesome, right? You can improve your ratio significantly by just buying the dip as it falls and waiting for the support on the lower time frames. But as I mentioned, ultimately, what we want to see is an expansion where we see this range break, volume expands, and then we consolidate up here with a bull flag or some sort of structure for continuation. And that would give us the first indication that altcoin season is on. We're not getting a huge pump and then a huge retracement back down to 886 retracements. That's bear market style type of price action. We want bull market style price action where we get an expansion and then flag out and then continue to the upside. So this is where we're at right now. I feel like we need to be looking for buying opportunities, maybe on lower time frames, but we need to find that change of character even on this dip. We need to see a reversal structure. We need to see class A bullish divergence on momentum and oscillators. We need to see a lot. We're right now at a small point of control, and what's really awesome at the current moment is the time to pay attention, because the volatility and the momentum and the red expansion is all extremely oversold on the 4 hour. So this is the time where you have to be paying attention if you're a trader. Now, ultimately, the EMA is facing down, red histogram bars here on the trend. Oscillator is not looking good. Multiple drives of bearish divergence on the 4-hour time frame, and we're getting that follow through to the downside in the last 48 hours. Okay, so let's wait for that bullish response and see what the bulls have next, or have in store for us in the next little while, until we see what happens with the elections. Guys, if I've offered you any value in this video, do the channel a massive favor. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is absolutely free. Guys, if you want to vote on the next deep dive that I do here on the channel, join the Discord. The Discord, you can go in there and you can vote on the next deep dive, and obviously there's a lot happening there. Lots of fundamentals, lots of learning material, and a great community. Take care, guys. Have a good one, and don't forget, buy the dip.